With advancements in technology, a lot of fintech companies are coming up in India which aim to help retailers gain access to alternative investment avenues which were earlier not accessible to them. One such popular category of alternative investment which seems to be picking up with a lot of early-stage companies coming up and getting decent traction from investors is equipment leasing or financing equipment. What is Leafround? Leafround is a marketplace that connects businesses looking to lease equipment for their operations and investors who want to invest money and earn regular monthly interest. The salient feature of Leafround, which makes it stand out from other leasing companies, is that Leafround does not create SPV, which means you get the pre-tax IRR for your investments, which are substantially higher than post-tax SPV returns. How does Leafround works? 1. The platform scrutinizes and lists companies who want to purchase equipment or assets for their business. Each listing is called a deal, which details the business to whom the assets would be leased, details of the asset being leased, payout structure, etc. 2. Interested investors commit money for buying assets and invest money in the deal of their choice. 3. Assets are purchased and leased out to the business with proper legal structures like agreements in place. 4. The company pays monthly installments for assets leased out to them, which are paid out to investors in proportion to their individual investment. 5. At the end of the tenure, the assets are bought back by Leafround from the investors, and the money generated is paid out to the investors. For example, currently, one deal listed on Leafround is Melora, a jewelry brand. Melora is looking to lease the following 3 types of assets from Leafround. 1. MacBook Pro 14. 2. Laptop iMac Pro 16. 3. Apple MacBook Pro 14. Let us consider the first asset, MacBook Pro 14. The cost of the laptop is 167,562 rupees inclusive of GST and shipping. The payout structure for this asset is as follows. As you can make out from the above chart, investors will receive Rs. 85.72 per month per asset as rent for a duration of 21 months. In April 2024, when the lease gets over, Leaf will take physical possession of the asset and the company will pay Rs. 29,366 for this laptop. If we calculate, we can earn 25% IRR on our investment for this particular deal and asset. In case the company not being able to meet the required amount, Leaf has tied up with Tokri, which is a liquidator of assets. While leasing out these assets, the repurchase price is checked with Tokri to ensure a smooth exit process if required. Potential risk factors. Like any other investments with Leafround are also not completely risk-free. The business leasing the equipment needs to make the monthly lease payments on time as mentioned in the agreement and the term sheet. Details mentioned in the deal are as per the information shared by the business. There might be platform risks since Leafround is an important mediator between the business and the investor. There might be problems recovering money or disposing of assets if Leafround shuts down. Leafround was founded by Nishchay Nath, Soumya Kushwaha, and Avinash Verma. All of them have studied at premier institutes and have worked with leading names like True North, McKinsey, etc. Apart from the founders, the remaining team is also highly experienced in their respective domains. Leafround alternatives. Leafround is primarily in the business of equipment, asset leasing. There are already a few platforms in India that are into this segment, some dedicatedly to this segment, whereas others offer different types of alternative investment options. Some of the alternatives are as follows: Grip Invest, Pies, Giraffe. Conclusion. I hope you would have got a complete overview of the platform in this Leafround review. The platform seems to have a constant flow of good deals. The IRR is pretty decent and the asset class is such that it is not too risky. You are able to get pre-tax returns, unlike on other platforms. The team is quite strong and seems to be well qualified. Looking at all these factors, you can consider investing in this platform and allocate a small section of your portfolio to this asset class. Now let's have a look at my portfolio.
So this is how the Leafround dashboard looks like. This is the user interface. It is a really easy and intuitive user dashboard. So if you go to deals, you can see the existing deals and the recent deals. So if you can click on any of those deals, you will get the deal terms, what is the minimum investment you can make, what is the IRR you can expect, and a tenure of the deal. So for instance, if you click on any of these deals, you'll get a lot of details. For instance, for EVs, you'll find out how many e-bikes are there, which is the company which has funded this startup, who are the competitors. Then there will be details about the company, what it does, the business model. Then there will be financial performance of the company, the fleet size, how the revenue has grown, the client growth, and then you will find details of this particular investment. So for instance, this particular deal, the asset life is 5 years and the bike is priced at 71,000. and it has a 40% depreciation every year. So they also have a partner called Tokri.com, which is a liquidation company. For instance, if the startup cease to exist after 3 years, so they can go back to this company and sell this asset to retrieve the money. And then it has all the lease terms. What I like about Leafround is, one, all the returns are pre-tax because there's no SPV structure, which makes it very simple to use. And many times people are investing through investment accounts which do not have a higher tax liability, so pre-tax returns are more helpful. And then they also have uploaded all the documents of the company, the asset details, the licensing contract, so people can look into the details if they want. I think the more important part is the company which you are investing in, the asset you're investing in. So I prefer in assets with shorter tenure and companies which have a sound business model, companies which have recently raised a decent amount of money, and sometimes also prefer assets which I feel I can relate to, for instance laptops. And there are certain companies which you feel are more robust. For instance, Melora is a well-funded company which is doing well, so I would prefer investment in Melora compared to an unknown company. Now I'll show you my investments. So I already invested in one of the assets, which was the MacBook Air 13. I invested 77,000, and it's a 2-year deal. I already received part of my investment, so it shows how much monthly rental I'm getting and what is the buyback value at the end of the tenure. So till now I have received 4 payouts, and it has been on time, as mentioned in the cash flows. Till now I'm quite happy with the performance. But obviously it's a new platform, so I have to be a little careful. I would be gradually increasing my investments. I'll be focusing on assets which have medium to low tenure, and companies and assets which I can relate to, which I feel will have a good market in case the startup does not do well or cease to exist. I think I've talked in terms of competition right now. um, Leaf has Grip Invest is the competition right now, but Grip Investment generally focus on the SPV model, LLP model, where everything is done through the LLP, which makes it a little more complex because people get post-tax returns. Not everyone want post-tax returns. That is one thing. Second thing, some of the assets are quite expensive, so that's why LLP model helps here. But Leaf focuses on assets which have a lower price, so it does not require an LLP, and which also make this model cheaper to execute. Thus, they are able to offer slightly better IRR compared to Grip. So I think which are the positive thing. But I've invested in both platforms because sometimes you get a good deal in one platform, while in other times there are better deals in the other platform. I'll be posting my monthly performance in my review report. That will give you a good idea how my investment in Leaf are doing, and probably that will help you to start your investment journey. I suggest everyone to start with a smaller amount, and when they gain more confidence, they can gradually increase their investment corpus.
You can read the full blog on this topic by using the link provided in the description. That's it for this video. If you enjoyed it, then hit the subscribe button and turn on the notification for future video updates. Also, share your reviews in the comment section. See you in the next video. Till then, bye bye.